So we're going now to the last speaker of today. And like I said in the introduction, again, a very important societal theme, namely the security of our data, of your privacy. So it's a very important field and a really truly inspirational speaker. I saw her this week also in the Senate of the. Then she was in Dutch, so it's amazing for an American in our Senate to perform in Dutch. And I learned a lot from it actually, because it was really at the Senate level, so I could also understand it. It was very, very, very good for me. She's the founder, and she has a PhD. That's important. So she's actually also coming back now to the university, PhD in computer science. She's the founder of the first non-profit in computer security, Radically Open Security. She won many awards, among the Women Innovation Award, and that makes me, of course, also saying sorry to you that in this series, she's the first. Some last session, some students came to me, Mark, are you only inviting men on the stage? Come on, this is another year now. Well, I think this woman is so strong, so that makes it all good. So she's also an awarded entrepreneur in the digital area. I'm very happy that she's here. Dr. Melanie Ryback. Melanie. Welcome.
Hi. Thank you so much for the introduction. So, as he mentioned, on Tuesday, I was in the Eerste Kamer. They had invited me to talk to them about AI and ethics and privacy. It was a coincidence, of course, that I was there testifying on the same day that Frances Haugen, the whistleblower from Facebook, was testifying also in the Senate in the United States of America. What the Dutch politicians had asked were the threats and some of the solutions for AI. The first presentation before me was Katelijn Jonker from the TU Delft, and she gave a wonderful presentation on the history of AI, as well as some of the problems that we would tend to think about. The fact that artificial intelligence is a black box, much of the time. The data hunger, that data collection on all of us. However, there's one thing that I think many of us do not think about when we think about the problems of AI. See, we usually think that technology can solve everything for us, right? I work in computer security, and as was mentioned, I am the CEO and co-founder of a cybersecurity company. So we are 7.5 years old, and I have 40 people, and our entire job is breaking computer systems. So our customers, which include Google, Ahold, Mozilla, the Corona Melder, the European Commission also. What we do is we go in, we hack things, and then we basically show them how we did it, and then we provide recommendations for how to fix it. But I've spent much of my career, and I have been in cybersecurity for 20 years, developing privacy-enhancing technologies. I've worked on VPN technology. We've worked on pseudo-anonymization algorithms, all kinds of different things, because I was also a security researcher at the Vrije Universiteit, also for about, I worked there, I think, about 7 years. So the point is that at a certain, I got really, really tired of developing yet another privacy-enhancing technology, basically to put like a Band-Aid on top of a business problem. If you look at companies like Facebook, there is no lack of technology that can be used to improve the privacy situation. There's all kinds of, algorithms, algorithmic improvements, pseudo-anonymization, different kinds of, ways of bringing more transparency into the black box of machine learning. There is a critical mass of algorithmic experts working at Facebook. In fact, Frances Haugen, the whistleblower, was herself an expert in algorithms. And yet, she felt the need to take a stack of documents and to walk to the Wall Street Journal. What we need to understand is that it is almost impossible to put these technology Band-Aids on business model problems. And it is a business model problem. They say our data is the new oil. This is what we are taught, including in business school, to think of data-driven business models. How can we monetize this data that's collected? This leads to the data hunger. And even with the GDPR, we are required to actively minimize the data that we're collecting. And yet we never do, because like hoarders, we think maybe someday I might need this. And anyway, it's a lot of work. The status quo is doing nothing. But the problem with this is, they knew, of course, in Facebook that, in promoting more meaningful social interactions, that they were also promoting, more comments, more reactions, but also it was also the most inflammatory content that was getting the most reactions. They chose for this algorithm knowing that it was promoting inflammatory content because it made the company more money on selling advertising. It's not because there weren't better algorithms available, it's because the priorities and incentivization in the company were in the wrong place. And apparently, if the employees are feeling that the only way to be heard, is to go to the Wall Street Journal, then probably escalating things within the organization is not working. Now, the problem is Facebook is not accountable. Mark Zuckerberg, in particular, is not accountable to anyone. It turns out that there are voting constructions in the companies. Basically, they have A-class shares and B-class shares. And the special shares that Mark Zuckerberg and some of his associates have are worth 10 votes for every 1 vote that a person like us would have if we buy stock in Facebook. So Zuckerberg, who probably has roughly, maybe 35% of the stock, has 60% of the votes. At one point, I believe it was Trillion Asset Management, an activist hedge fund, they tried to file a shareholder resolution in the annual meeting of Facebook, changing that system so it could be 1 share, 1 vote. Surprise, surprise, Mark Zuckerberg single-handedly voted it down. So if Mark Zuckerberg is not accountable to the shareholders, who exactly is he accountable to? See, this is a problem. And this is also part of why the politicians, are organizing sessions now on artificial intelligence, because they are scratching their heads saying, how can we fight these behemoths of companies? The problem is, of course, this is a structural, systemic problem. The fact that these kinds of voting constructions are even allowed, it's from decades of lobby. These problems didn't get here from nowhere. But what we don't understand is that all of us, including all of us as students, can question the current system, and we can change the narrative and actually also start putting pressure on everyone, from executives to politicians, to also start making meaningful changes in the system. So the first problem area that I think you should be aware of is with venture capital. Now, as MBA students, probably most of you had a very large emphasis on capital as part of your educations. I'm sure you learned all about VC, how to pitch, how to do slide decks, how to negotiate term sheets, interesting stuff. And it's funny because as a founder, when you get venture capital, it is universally celebrated. Almost every newsletter, from Startup Amsterdam to, the Amsterdam Center for Entrepreneurship to pretty much any incubator, it's always congratulations to this startup for having their A round. Congratulations to this other startup for getting acquired. Congratulations, but let's stop and think about this for a minute. We're taught that this investment is necessary to start a startup. But let's ask the question, is this true? And is this desirable? So, Silicon Valley as such, including the whole venture capital ecosystem, is probably 40 years old, right? So how did we build businesses before Silicon Valley? Somehow we managed, Maybe we managed by building companies, by bootstrapping them, with launching customers. That is one way of starting a business. It could be there were also loans, banks, friends, and family, but the essence was there was no huge, capital, pile of capital dropping from the heavens to allow us to spend money on what we want to build rather than on what the market ultimately wants us to build. The problem is, with the current startup ecosystem, is that 90% of startups fail. 90%. I think that in and of itself is an indictment that the system is not working. The principle, though, is that last 10%, of course, you've got these investors and they're basically buying lottery tickets, right? And if they know that if only 1 out of 10 startups is going to succeed, the idea is that they just fund, 10 startups. And then that one, they make the losses on the 9, and that one has to be such a home run, right, that it compensates for all of those other 9 losses. And that's why, as a founder, if you step to a VC, it's not okay to just have a moderately successful business. It's not okay to just have a nice lifestyle business that allows you to live comfortably. No. You need to make it a unicorn, right? And we have, until the top, of the Netherlands, we have people like Prince Constantine shouting from the roofs, "We need more unicorns in the Netherlands." Do we really? Let's stop and think about this. A unicorn is a company with a $1 billion valuation. Now, first of all, what is a valuation, right? A valuation is basically the number of outstanding shares that are issued multiplied by the price of that current share. At one point, I'm not sure if you're familiar with the company Buffer, but they had, Basecamp, they had they had published a blog post that said, we have just sold 1/1 billionth of a share for $1. So that now gives us a valuation of like, $10 billion or $100 billion. Congratulations. It was obviously a satirical blog post. But the thing is, that is actually how valuations work, right? And, it seems funny in that context in such a blog post, but the sad part is that is actually that's actually how things work. And there have been real-life cases where VC firms like Kleiner Perkins have basically made very, very small investments at an extremely overvalued price, simply with the attempt of raising that valuation. So it's not actually a joke after all. It's actually a tool that's get used for creating inflated valuations for companies. Why would we do this? Well, let's say Radically Open Security had a valuation of, $10 billion. I would really seem like a successful entrepreneur, right? And probably everyone around me, we would pump it up, we would really hype it, we would make sure it gets everywhere in the press, and then I would want to IPO my company. The problem, though, with a lot of these unicorns is they are losing money hand over fist. I'm sure you heard about WeWork. WeWork is this co-working space that was essentially losing money 5 times faster than it was gaining it from customers. What people don't realize is that 90% of unicorns are money losing. 90%. And this is not just new unicorns. This is also unicorns that have become unicorns for a very long time. Now, the problem is we are treating our startups like battery chickens. In Dutch, they're called plofkippen. So the way that it works is we have this startup, and we artificially force feed it with investor capital, right? So they can basically hire people as quickly as they're able to. And so they grow artificially, and they plump up, and they get juicy and attractive looking, until they get sufficiently large that they reach the liquidation event, in which the chicken is slaughtered, the value is pulled out of the company, and the company is left over with essentially a carcass of what it once formerly was. Here's also the thing. If 90% of startups are revenue losing, and we're also in the situation that 90% of the founders, are having their startups go bankrupt. The real question is, if so many people are losing, who here is winning? Now, the answer in all of this is the fund managers. And really, this is a case of follow the money. Because if you think about the traditional venture capitalist, so basically the VC fund manager, their business model and is fees, right? So basically, and they tend to have a certain fee structure that they call 2 and 20. So that is a 2% asset under management fee and a 20% carry, as it's called. And the carry is a performance incentive that essentially when they exit the company, then they receive 20% of this. Now, first of all, let's analyze this rationally. The carry, that 20%, performance incentive, this embeds the growth imperative into startups. This is why, startups, as soon as they receive venture capital, are pressured above else to grow. So we can basically get to that exit moment so the fund manager could get paid. But truthfully, though, that's actually not even where the real business model is at. It's really that 2% asset under management fee, which is really where the money is at, right? So the way that that works is, 2% sounds like a small number, like 2 is small, right? But people don't understand how compounding works. Think about a 2% mortgage, for example. Another example is, I'm American, so let's say that I wanted to retire. I can put my money into a Roth IRA or a 401k. Given the historical performance of the stock market over the last 25, 30 years, if the fund has a 2% management fee, literally 2/3 of my returns go to the fund manager. Most people don't realize this. John Bogle, who was the founder of Vanguard, used to talk about this actually quite frequently. So, this is really, I think, at the core of the problem. So you've got these revenue-losing, plofkippen, and basically they're getting hyped. And what you're essentially doing with IPOs is you are performing a pump and dump scheme on the public markets. Because after the IPO, if these things were revenue-losing before, they're probably going to still be revenue-losing after. But the thing is, the people who are buying it actually don't care because they're betting on what's called the greater fool theory. Everything is fine as long as you can find a greater fool who's willing to pay more for this particular asset than you are. Of course, this is also the principle behind, cryptocurrencies, other stocks, tulips, take your pick. But, and this works in a growth economy. But the problem, though, is the moment that the economy flattens out, or the moment that the economy dips, like it did in March of 2020, the last investor is always the one that's left holding the bag. Yeah? So, we're starting to see here, some of these systemic problems. The other thing that most people don't realize is that I believe it was 85% of VC funds have not kept up with the stock market over the last 25 years. 85%. So you've got these VCs that are making all these wild promises to their limited partners. They're saying, 10x, 18x. These are the returns we're going to give you. But if you look at it statistically, historically, they have not been able to deliver on these promises. So what is actually happening here is the fund managers are getting these 2% fees regardless of how the business does. Which means when the value inevitably goes down of the business because it is still revenue losing, then the investors who purchased it are the ones that lose. The other thing is that when you have this money-bleeding unicorn like WeWork, people don't actually ask the question, whose money is that company losing? Well, if you think about it, in the United States, for example, VC funds are 60% funded by pension funds. So what that actually means is that revenue-losing unicorn, whose money is it bleeding? It is bleeding our money. It is bleeding actually taxpayer money. The reason, and we need to ask ourselves the question, why are pension funds going into venture capital? Knowing that it has not kept up with the stock market, for the last 25 years. The reason here is the low interest rates. Right now, I'm sure you're familiar with the fact that we're getting basically no interest on our bank accounts. In fact, we get negative interest now. Certainly on my company's bank account, we're paying negative interest. Bonds at this point, which were once considered a safe investment, these are returning next to nothing anymore. And this is why pension funds are going into increasingly risky asset classes. In other words, they don't see any other way. They're desperate because people like us at a certain point are going to want to retire. And when we do, we are going to expect to get that money that we've been promised, for all that money that we put in over all those years. So basically what's happening then is that, we're kind of getting this on all sides, because the pension funds who are putting money into these, revenue-bleeding unicorns are losing their money. The people who then buy the company post-IPO, when the stock market stops growing, they're losing money on their side. And in this entire system, the only person making money is either the early investors, which might include the founders, and the fund manager themselves. This is how we create the 1%. So we need to ask the question, how do we fix this? The problem is the 1% has the largest marketing budget, So they have a whole lot more reach to tell their story about how great venture capital is than I do. We also don't realize that business incubators have an inherent conflict of interest in what they teach. Business incubators, particularly tech incubators of the style of, say, Y Incubator. Most of you probably don't know that the founder of Y Incubator, Paul Graham, he wrote a blog post, it was rather controversial, in which he wrote, "I am a manufacturer of income inequality." So we can't say that these guys don't know what they're doing. But business incubators are actually started by rich people, basically who are looking to take their capital and get a return on it. There are historical examples of this, also like Nolan Bushnell from Atari. He also founded Chuck E. Cheese. He created one of the very first tech incubators, and he used it basically for valorizing his own ideas. For him, the definition of his success was, perhaps bringing some of his ideas to life, but mostly just if he was able to exit the companies, sell the companies or otherwise IPO them. He had mixed results, but he got enough money off of it that basically an entire industry sprung up afterwards, including Y Combinator, which inspired many, many others. Now, but the problem, though, here is that these incubators are here to serve the investors, and they're not here to serve people like us who want to start companies. I can give you an example. I teach sometimes some lectures in what I call post-growth entrepreneurship with ACE, the academic incubator. I'm sure you're all familiar with it. That's affiliated with the university system here in Amsterdam. I went one other time to Rockstart. I'm sure you're also familiar with it. It is a commercial incubator also here in Amsterdam. And I said to Rockstart, I would like to give just a guest lecture to your founders. I will do it free of charge. I'm not going to ask for a cent, but I would like to talk about new forms of social entrepreneurship that are less financially extractive. They thought about it, and then they said, well, we have investors, and they are investment banks like Merrill Lynch. So, we're really sorry, but, we actually don't think that's a good idea, and we have to politely decline. Stop and think about this. An incubator refuses a free lecture on new forms of social entrepreneurship because they are afraid that it will bring them in conflict with their own business model. Nobody talks about this conflict of interest. You have the same conflict of interest also in business schools, but it depends on which one. If you look at the Stanfords or the MITs or the Harvards, they tend to have endowments. And those endowments come from people who don't particularly want the status quo to change. And then you have other universities that are a bit less wealthy and they get more money from the government, like, for example, the University of Amsterdam. And actually, where do they get their money mostly from? Well, the government and subsidies. And they look at new forms of social entrepreneurship and they say, hey, cool research. And of course, research means grants. Yet another case of follow the money. It's all good. But this is the reason why a university like the University of Amsterdam, is far more open to these new ideas about social entrepreneurship than, one of the larger, more, I would say, well-funded universities in the US. So we need to ask, how can we do things differently? The first thing that I think we need to do differently is to make bootstrapping sexy again. Let's stop just blindly parroting the rhetoric that we need more unicorns. Let's stop blindly parroting that rhetoric that venture capital is the best thing ever and we need it as new founders. Instead, let's put more attention on what is it that we're actually giving up if we get venture capital. People don't understand it, but venture capital is a form of debt, and with that debt comes slavery. And maybe we need to stop celebrating in those newsletters that congratulations, this startup got their A round. Maybe we should say my condolences, actually. Because what it means is they have not yet found a solid value proposition and a solid business model that will allow them to grow organically from customer growth. In fact, venture capital is a distraction from all that. It distracts you from having a business model. There's a reason why in The Lean Startup by Eric Ries, he talks about building minimum viable products and he talks about collecting validated learning by selling something early on. So that way you can actually follow the pain in the market and pivot appropriately. VCs love The Lean Startup and they'll give all of their founders a copy of the book, but only after they've given them that big pot of capital first. And that's what creates that product market fit disconnect. Because the founders at that point, they have money. What are they going to do? They're going to spend it. They're going to spend it on giving themselves salaries. They're going to spend it on hiring other people. They're going to spend it on offices because it's comfortable and it makes them look successful. But what they're not doing, they're getting good at spending money, but they're not getting good at building a solid, lean and mean, efficient, effective business. So we are teaching our founders or potential founders the wrong things. So the first thing I think we need to do as students is we need to start a discussion of these problems with the model that is being taught in our schools. See, the economics students already figured this out. They have a student association that is called Reinventing Economics. And they are analyzing the economics curriculum, and they are, looking at all the different classes, and their conclusion was, this curriculum is not fit for this century and our current problems that we have today. I think we should maybe think about starting Reinventing Entrepreneurship, because we have the same problem. There was actually an incident. If you all recall Occupy Wall Street, students had actually sat in the front row of the EC 10 Introduction to Economics class from Gregory Mankiw at Harvard University. The students in the front row, they stood up and they said, "We don't want the ideology that you are teaching in this class," and they walked out. And this is what started the momentum that created Reinventing Economics, that created the post-crash economic society, that led to the increasing popularity of economists like Kate Raworth, like Tim Jackson, And we as students here, all of you as students here, have the power to do this. Because what we have here is a cultural problem. And cultural problems require cultural solutions. And once we can bring some attention to the problems that are inherent in the current capital scale exit neoliberalistic model of entrepreneurship that we're being taught, then we can start focusing our attention on the solutions. Now, of course, social enterprise is the most obvious solution, right? It's also the theme of today. I think we need to also turn a critical eye towards social entrepreneurship. The problem with social enterprise is that it still basically takes over the Silicon Valley model, capital, scale, exit. It's just sort of like VCs instead of investors, scale maybe 2x or 3x instead of 10x maybe, and exit, well, you still exit, it's just you're selling your B corporation to Unilever. No offense, but we can do better. What we need to do is we need to start calling the impact investors to task and saying, why are you using the same fee model as the commercial investors? Because most impact investors are still using that 2 and 20. However, it can be done differently. There is a really interesting not-for-profit investment fund that is called Snowball Impact Management. It's located in the UK. What they've done is they have thrown out the carry, and they have made that 2% asset under management fee, they have made it basically cost of business. In other words, cost price, assuming that they are paying their staff middle-class salaries and a pension. The rest of the returns that they're getting from this fund are basically being recycled into the fund itself. So in other words, there is no extraction from the system above and beyond middle-class salaries and pensions that is going to fuel the 1%. Because the financial motivation, these perverse incentives are pulled out of the fee structure, it means that this fund can actually focus on what it's really trying to do. And what it's really trying to do is to build impact businesses. So I think that we need to start, being brave enough, to ask, with the social enterprise ecosystem, when are you going to reform your fee structure? And we also need brave people who are, indeed, leaders who will step up to create such funds themselves. Other things that I think we can think about, there's also a rise these days in shareholder activism. Now, we tend to think that shareholder activism is, well, most of the times harmful and evil. I mean, if you consider the kinds of so-called activist investors like, Nelson Peltz or, most of the time what happens is that these investors basically come in, they take minority shares, and then they leverage them to try and force the executives to do stock buybacks, which of course reduces the number of shares for the valuation of the company, which boosts the price of the shares, and then at that point they dump the shares and run, right? So, but there are new forms of shareholder activism that are very exciting and that are up and coming. I don't know how many of you are already familiar with Engine Number One. Engine Number One is a small hedge fund that is run out of California. They partnered with the California State Teachers Union Pension Fund, and they had basically 20 million asset under management. What they did is they took this 20 million and they used it to buy a minority share in ExxonMobil. Of course, 20 million is nothing next to ExxonMobil. But it just so happens, though, that at the moment, there is a happy, positive correlation between what they call ESG investment, environment, social, and governance investment, and good returns. It doesn't have to be that way, but there's a trend at the moment. And what Engine Number One actually managed to do is they convinced BlackRock, who, of course, is one of the largest hedge funds that exists, and they basically managed to convince BlackRock to go along with the proposition that ExxonMobil, gas and oil exploration are finished. It's moving into, limited resources, a hostile environment, and the future is in renewables. You need to reallocate your resources to instead support development of renewables. Because they managed to convince BlackRock to go along with this, Engine Number One replaced 3 of the members of the board of directors of ExxonMobil with climate activists. An entire generation of Greenpeace activists have been trying to have some kind of an impact like this, and it took a small, plucky hedge fund to do this. Here's the thing. Any of us can do something like this. A lot of us don't understand that investment is a political act. This includes our pensions. There's an increasing amount of discussion about talking to our pension funds about what they actually are investing in. If we put pressure in them as people, we can also get them to defund things that are harmful. But to follow up with engine number one, after that, they made their next move, and they did something that I think was even more clever. They started something called the Transform 500 ETF. Ticker symbol, VOTE. What it is a index fund on the S&P 500. So in other words, if you want to just put your money basically tracking the stock market, and I think I mentioned that the stock market did better than most 85% of VC funds anyhow. But the point is, if you just want to put your money into the stock market, it acts exactly the same as Vanguard, as iShares, as basically anyone else who's implementing an index tracker, but the difference is that their shares are used for shareholder activism. So basically, it's like they're offering a fair trade index fund. I don't know about you, but I think this is really exciting. In fact, this is potentially transformational, because they are selling exactly the same product as what's already on the market. So they don't need to convince people to buy something new. It's the same product for the same fees, which are generally quite low. But they just need to convince people, well, you should just buy your index tracker from us and not from the other guy. You know, I think they started already with, I think they started with over 100 million, just when they launched the index fund to start out with. You know, I think that we need more of these things. In fact, I think that we need a UCITS ETF tracking the Euronext that does exactly the same thing. And I think that they should partner with people like Follow This from Mark van Baal. and yes, I've been in contact with them. And I think that we can do this here too. And we should, and we need to. People don't understand that corporate governance right now is monopolized. See, there are these things called proxy advisory firms. And there's two of them that are quite well known. The first is called ISS, and the second one is called Glass Lewis. These two companies tend to provide voting advice that rather lazy shareholders, I would say, like pension funds or investment funds, they don't want to sit there and think about how to vote with the companies in their portfolio. So they take the advice from ISS and from Glass Lewis and basically just fill in exactly what they tell them. Now, ISS and Glass Lewis are providing advice for probably almost all of the large, pension and investment funds. But of course, they're also conservative. ISS and Glass Lewis think that ESG means putting conservative women on the board. We can do better. And clearly, parties like Engine Number One also can do better. Wouldn't it be really cool if somebody started, a nonprofit proxy advisory service company that could compete with ISS and Glass Lewis on providing advice? And the funny thing is, this actually happens to be the same kind of research that needs to be done, also for shareholder activism and for such an ETF. I'm trying to sketch now, a solution, and it doesn't take lobbying the government to change this. We don't need subsidies. We don't need new laws. We don't need new rules. We just need one entrepreneur who is brave enough to do this. And that can be anyone here in this room. We just need to want to understand what's possible, and to be brave enough to have a vision and go after it. So I hope that today and in this lecture for today that I've grown you, I've caused you to question some of the dogma that you are learning in your business educations. We are receiving a certain amount of tools in what we're learning, and there are also equal amounts of ideology mixed in. I implore all of you students here to try and sit down together to start a dialogue about which parts of these tools are actually tools and which part of these tools are actually ideology. Because you can separate these two things out and then move on in a better way. Thank you.
Thank you, Melanie. And welcome in the lion's den, of course, because I bring the mic to the students again, because we have prepared some questions for you. I think some of the big lions are also in the room, that's probably also nervous also to respond to you. I think we will discuss indeed, especially also, of course, the challenges that you just raised and your criticism on the venture capital model. But first, we have a few other questions to start with. The first question is from Serkan. And it's just a very nice personal question.
Yeah, now that the pandemic is more or less over, I'd like to know how the pandemic affected your career and your work at Radical Open Security.
Okay, so your question was, how has the pandemic affected my work and career at Radically Open Security? I believe that I've been extremely fortunate because I work in computer security. So I have a company that does security audits for anyone, really. With the pandemic, an increasing number of IT systems, have gone online. In fact, just in terms of work and our lives, more and more things have gone online. So I actually work in one of the sectors that has, ironically enough and somewhat sadly, benefited from the pandemic. The other thing also is that my company was actually online and 100% remote to begin with, because of course there are a number of 100% online companies like Automatic, like GitHub, Radically Open Security is also one of those, because we're also a platform of penetration testers from all over the world, and we operate in online chat rooms. We have a formula that we call peek over our shoulder, where we let our customers into the chat rooms also. So basically, we were already tooled for doing everything online. So in that sense, in 2020, our revenue went up. This is not something that I would want to brag about generally, because, out of sensitivity to those who have suffered in this past period. But I would say that in general, yes. Because of the increasing movement of everything being virtual, there's been an increasing demand also for security services.
Thank you.
Thank you.
Yeah, indeed, I was thinking already about that. It's probably so much more online now. So I see that also in the university. So we have so much more privacy issues, and indeed, we are, I think, also currently under hack for our student satisfaction system. So I hope it's a friendly hacker then. That will be good for me. Yes. So the next question is from Jan Schreuder.
Thank you. So first of all, thanks for this very eye-opening presentation. It was really not what I expected, but I'm very happy that it was like this, actually. My question is more about business opportunities, though. As a business leader, but also a scholar, where do you see business opportunities in the security, global security for the next 5 to 10 years?
Well, I think first of all, there's no lack of opportunities in security. Criminals will always be there, and they follow opportunity themselves. So People always ask me, where is the future of security? And the answer that I always give is, where is the future of technology? Because wherever technology goes, the attackers will follow. The moment that a technology becomes interesting enough for users and it starts having associated business models attached to that, that is the moment that it also becomes interesting for hackers and they start having associated business models and they will follow along. So truthfully, security in and of itself in the basic building blocks hasn't changed much since the 80s. The really basic things like, buffer overflows and script injection attacks and input sanitization and SQL injections, these things have been the same forever. Since before I was doing security even. But what does change really quickly is the application domain. So there is always going to be a demand for security professionals. Certainly, particularly with the increasing movement of our lives, online, the increasing digitalization of pretty much everything. Particularly if you study the technical side of things, there will also be no lack of jobs for you because, there is a really bad shortage right now, not just of IT professionals, but also particularly of technical security professionals. I used to work in the computer science department at the FU, and we really had trouble recruiting students because, particularly here in the Netherlands, because computer science isn't really seen necessarily as being as sexy as some other things like, business or, and the department was struggling in getting students. We had to try doing like lifestyle informatics, by combining it with AI and, things like this. So I think this is the problem. So I think anybody who goes into security, it's extremely easy to run a successful company, actually. If you do play the Silicon Valley model, there's no end of investors also that are willing to fund these companies as well. So I would basically just say, if you learn and you get the skills, to be able to maneuver in the security market, I don't anticipate that you would have any problems. Sure.
Yeah, so I think also if we see, of course, from the first presentation, how healthcare is becoming a data-driven industry. Yes. So, of course, with very sensitive security issues also. So that would be one of the opportunities, I guess. So now we are here, I think most of us are not computer scientists. So is there also for these business experts, is there also opportunity?
In cybersecurity, you mean?
Mm-hmm. No.
Well, I've got a project management team and a finance team in my company, so, I need a few non-technical people, but I don't think that's necessarily where the opportunity would lie.
Okay. And now they switch off. Huh? Okay, so, well, maybe something else that we can help with. So, Nora.
Hi. Thank you so much for sharing your critical perspective. Having recently had a course on morality, I know that it can be very tricky sometimes to decide what is morally right or wrong or even questionable. On the website of Radically Open Security, you say that you don't get involved in morally questionable jobs. And that got me wondering, where do you draw the line for this? Where do you draw the line for what is morally questionable?
That's a good question. Ethics is tricky. And it's also highly context dependent, and it's also incredibly subjective. What I think is ethical, somebody else might think is totally okay, And if you look at some controversial topics like abortion, you might have one person who's incredibly passionately, pro-choice, and then another person who thinks that it's absolute murder, and in the eyes of both people, they both have their own beliefs about ethics, and you can't say that any one person is wrong or the other person is right. It's just relative. So I think the best that you can do is try and promote open dialogue. Within Radically Open Security, the form that takes is we have a chat room that is called Ross Ethics. And I encourage anyone in the company to red flag certain jobs or customers. And what happens then is that raises basically the issue with the entire company. And then everyone in the entire company is allowed to provide input. And the way that we resolve things is that we try and look for a kind of rough consensus. And some issues are sort of more black and white than others, right? I mean, anything like working with intelligence agencies that very clearly violates what my company is about, And again, that's not to say that it's wrong in another context. I mean, there are other companies that focus on creating 0 days, for NATO countries to weaponize in their cyber wars. It's not that I'm saying that that's wrong, but I'm just saying that I don't want my company to do this. That's my choice, and that's the choice of the people working for me. I consider 0 days to be weapons, and I consider selling them to be, Wapenhandel. Basically. So that's sort of the thing. If we can get agreement, and sometimes there's also conflict between what's ethical and what's legal. For example, one time the Department of Defense approached us for a particular assignment. The request was perfectly fine. It was legit. They didn't ask us to do anything really, I think, all that questionable. But the thing was, my guys, they have, we've got a pretty high tinfoil hat quotient in my company. And, they're not so hot on the DoD. So when we got the request, quite frankly, just nobody was interested. So it wasn't that anybody per se had an ethical issue, with the request, but it was more just like, I don't force people to work on something if they don't want to. So, I just asked who's interested in working on this job, and nobody raised their hand. At which point I just went back to the DoD and said, sorry, I'm not able to staff this for you. On the other hand, we were also approached one time by the activist organization Women on Waves, the abortion boat. And, this is questionable whether or not it's legal, because they're basically picking up women from places where abortion is illegal, sailing them out to international waters, performing the abortion, and then sailing them back. You can imagine that they have some information security needs as well, because they've got some serious adversaries. They've got countries pissed off at them. We, because of this legal gray area, I raised it also myself in Ross Ethics. Hey guys, how do you feel about this one? And I have never seen such an outpouring of love in the history of my company as there was, for Women on Waves. So, again, that's not to say that it's a clearly, black or white, that we made the right ethical decision, but at least, culturally speaking, and given the context that we're located mostly in the Netherlands, and if not in the Netherlands, in westernized countries, we agreed that in our ethical framework that this was what we wanted to do. So.
Thank you, Manny. Thank you, Manny. Now this is, so you asked it also as a case, because you have been studying it. Or you finished the course already?
Oh no, it's still ongoing.
Still ongoing, okay. So does it resonate in the frameworks of the course, of your learning? So anything that you can give back already? Or?
Well, I just find it really interesting to hear your perspective as a leader, because we learned a lot about what is ethical leadership. How can you make sure that within your company there's ethical practices and that everyone's voice gets heard? So I find it really interesting that you really open up the space for everyone to say how they feel about it. And I think that is generally a business model that many other companies should also follow.
Yeah, thank you. In general, I'm a really large fan of decentralized management, such as Holacracy, by Brian Robertson, or Reinventing Organizations and Teal by Frederic Laloux. I believe that, for sort of future-oriented organizations, that's a very smart way to organize.
Thank you. Then before we go to the discussion about the VC capitalism, a last question from Ola.
Yes. Hi, Melanie. First of all, wow, thank you very much for your insightful presentation. Your words truly made a revolution in my mind, and I think they will help me understand my role as a business student better. And before I ask you my question, I would firstly want to quote recent statistics that show that women make up for only 30% of workforce in tech industry. And do you think that tech industry would benefit from acquiring more female talents? And also, how can women be more drawn to this industry, and how the gender gap in tech can be fought? Thank you.
Yeah, that's a good question. I mean, how to solve the women in tech problem. Yeah, it's a cultural thing, and it's a really long road. I mean, myself, I've tried, with women in tech initiatives. I started something in the Netherlands was called the Dutch Girl Geek Dinner. I mean, it hasn't been super active lately, of course, also because of the pandemic. But basically, the whole idea was just getting women speakers and that are really kicking butt and like giving them a podium and really displaying them as role models. I think also VHTO is amazing, in what they do, and also with the way that they have role models and they bring them to primary schools and secondary schools. Also to, we need that kind of visibility and role models, and I think it's really important. That being said, though, I think it's also really tricky because I think it's also sort of in the culture, the Dutch culture, to a certain extent. You have it less in Asia, because, I mean, women are a lot more likely to go into tech in Asian countries. Like, I think in China and Indonesia, you see a lot more female computer science students, actually, than you would find here. But still here, I mean, most of the women just think, oh, I'm going to go into the alpha studies, or I'm going to, work in healthcare, or I'm going to stay home with the kids. I mean, not to say that it's not changing, but it's much more so here than it is, for example, in the U.S., where I come from, and most certainly both of them are much worse than Asia, where I think most of them just are more oriented on getting real skills and trying to make money. How do you fix that? Every bit helps. So, I mean, the more dialogue we can have about it, the more initiatives we can organize, events we can organize. I also led a all-female capture the flag team together with the women in cybersecurity when we, played CTF at some cybersecurity conferences like Hack in the Box. I mean, these kinds of things help, but you would need enough people promoting these kinds of initiatives. It's not going to fix things overnight. And the other thing also is that, you have to start, I think, when the girls are young, to really sort of plant the seeds. I mean, look, my mother was a C programmer, and my father was a telecommunications engineer, and that's probably what gave me the idea, that technology was fun and interesting, which eventually led to my going into that. But, we have to plant the seeds now, and it's probably going to take a number of years before that fruit, really starts, blooming. and once because those girls have to grow up, and then they have to go to school, and then they have to enter the workforce. So, I mean, I don't think it's going to be a change that's going to happen immediately.
Thank you. Then we'll move now to the subjects of your business model. So clearly, you're a very strong advocate of social entrepreneurship, or let's say a non-capitalized form of doing business. So I had a question, because all the questions are now based on a survey on the students, let's say based on 900 questions of students. We picked some of that. Stefania Lomba so asking, but do you see anywhere also a clear disadvantage of your current business model?
Yeah, so let me explain really quickly actually what my business model is, because I actually didn't touch on it during my presentation. Perhaps I should have. Radically Open Security gives 90% of its profits away to charity. So the last 10% is our cash flow buffer. And I managed to run a pretty large business that way. The way that works is we used a small business model hack called in Dutch it's called a fiscaal fondswervende instelling, a fiscal fundraising institution. It's actually a business model from the Dutch church, because churches sometimes want to do corporate spin-offs, then they raise some money, and then that money goes with a tax benefit back to the church again. A famous example of this is the Language Institute Regina Caeli, otherwise known as the Nonnen van Vught. The nuns started the Language Institute, and it's a really great quality language institute. Like Queen Maxima learned her Dutch there, and then that profit basically goes back to the nuns with, a small tax benefit. So I decided to basically make my security company the so-called commercial spin-off, and I decided to make my so-called church the NLNet Foundation. And Stichting NLNet is an organization that's been around for probably almost 25 years. And they're basically a funding agency that funds open source digital rights organizations like Bits of Freedom, but basically anything for a better, open, transparent internet. So projects like Tor, GNU, EFF, Jitsi, DNSSEC, WireGuard, anything along those lines. So the whole, and that's the thing, it doesn't actually have to be a church, it can be any aanbestichting. So basically any foundation that's, registered by the Dutch government as being charitable. Now, there's nothing magical about cybersecurity. Anybody could take this business model and use this business model. And I have been promoting this business model also with my own actually startup incubator called Nonprofit Ventures. And we specialize in helping to bootstrap nonprofit startups. So basically to help other founders create startups that are basically the same business model as Radically Open Security, but in other areas. And so far we've run 2 cohorts of about a dozen people through our program. And we just opened the call for applications actually for a 3rd cohort. So if any of you want to apply, please do. But anyway, the point is that in the first 6 years of my company's existence, we have donated over €500,000 to the NLNet Foundation. And mind you, this is money we can afford to miss, right? Because when we talk profits, this is after our customers have paid us, we've paid our staff, I've invested everything I need, for growth of the platform, and also we can even make buffers like for next year if I know that there's an expenditure coming up. And this is how I can actually afford to donate 90% of my profits and still have a robust and growing company. So, disadvantages. I mean, of course, there are some disadvantages, I think, of being bootstrapped. I mean, it's harder to bootstrap, I think, if you don't have any capital of your own. Because, look, I'm a privileged IT person. I'd been working, at IT companies for a few years, and I did have some money saved up. So I knew that I could probably afford to bootstrap for a year or two, and if it went bankrupt, then I would just go back to having a real job. Fortunately, things worked out, but that's certainly one thing. You can overcome this because, I mean, if you think about the book, I believe it was Originals, they were talking about companies like Warby Parker and how actually the founders kind of hedged their bets and they continued, keeping being a student or working a full-time job and just like doing it, on the side. It's not that you have to go all in, at once. I mean, anyway, when you're bootstrapping, it's going to start slowly anyhow, and you can work at something else, but then gradually shift your hours over as the business grows. So, I mean, that's also, a way of, being able to bootstrap it. The other thing that's harder, though, is that, and what I think also people don't understand is that venture capital, so basically by subsidizing revenue-losing companies, you are deforming basic market economics. It's kind of like the reason why, Amazon tried to enter India. And then all of the shop owners in India started protesting on a really wide scale because Amazon's strategy is they basically go into a market, they subsidize, basically the sale, and transport and everything. And basically you're getting consumers addicted on stuff that is unnaturally cheap. Right? On the other side also, if you think about these tech companies with all this VC, basically, they are losing money, right? But because they're losing money hand over fist, they can also afford to pay higher salaries, because they don't have to get that money from customer revenue. So the problem is, for those of us who actually are paying, who actually have to pay staff through customer revenue, it makes it harder for us. It's harder for me to pay the same salaries or rates sometimes as somebody working for some overhyped, over VC'd, other tech company. But then again, it's not too bad. I mean, a lot of my freelancers are also earning 75 to 100 euros an hour. So let's face it, they're not suffering either. So. Yeah.
Melanie, so we have such a heated discussion, so we are almost, we're actually a few minutes over time. So I will just make two last short questions. And then one is, so in the, oh, maybe I should move away from that speaker. One is that came also in the discussion in the Senate. So that may be, I thought it was maybe a disadvantage that there's a relatively small company, and maybe also, let's say, it's a private business. So how to bear the legal risks of the field you're in. So, well, you have these giants of companies with huge interest, like the Amazons and the Googles. So how can you bear the risk of any legal case against you? Or wouldn't that be more easy if you have indeed a corporate model?
Well, let me be clear. I am a company. Like, Radically Open Security is a company. We're what's called a company foundation. So we have a BV, a company, and 100% of the shares of the BV are owned by a stichting. Basically, that's our corporate structure. And also the BV is registered as this fiscal fondswervende instelling, right? And basically, we also use boards to prevent sale of the company. So we also basically are steward-owned. But in essence, we're still a company. So in that sense, I mean, all of the usual protections, the whole, corporate outer layer that, and protection from liability that any company would have, I also have as the director. Of course, if I am grossly negligent, you can still prick through that outer layer of being a company. The other thing also is that, like for any company, we've got two things in our arsenal. One, we've got lawyers, who draw up really great contracts for us, and, I probably also, pay relatively a lot. I mean, we're just updating our contracts now for GDPR. It keeps changing. You don't want to know how much money I'm anyway. But the point is, and the second thing in our arsenal is insurance, and as much as any company has, liability insurance, corporate liability insurance, cyber risk insurance, I mean, basically, bestuursaansprakelijkheidsverzekering. How do you say that again? I don't know. Anyway, but the point is that, all those same insurances that any other company would have, we do too. So, and we try our lawyers right now are also busy harmonizing our insurance policies with our legal contracts. So look, just because we are an activistic organization doesn't mean that we're not approaching the business seriously. So I would say all of the same tools that are available as a social enterprise are available, as would be with any standard company.
Thank you.
Yeah.
There's a big hand for Melanie Rybeck. So this is your certificate. And maybe just as a closure, maybe now that you're in the lion's den, a last word to all these young lions. Do you have a last word for these lions here?
A last word? Well, I hope that what I said today spoke to you, and I hope that each of you will understand that business is one of the most powerful forms of activism. Business can be a mixed media for art. Business can be a form of spirituality, and business can be a means of creative expression. Business is so much more than maximizing profits for shareholders. Each of you can take your own responsibility and approach it this way, and you can be the new superheroes.
Super. Thank you. Thank you, Melanie. Thank you. Okay, that was it. It was the end of the series. I hope you found your inspiration. And like Melanie said, of course, if you want to go discuss our curriculum, you're more than welcome. And I will see you. Thank you.